Hello and welcome back. This is David from the Personal Finance Squad. We just finished up with section 1.2, going through the supplemental items to have a tracking sheet and a bank account, which are both separate from the main account and the main spreadsheet. Now we're going to go through section 1.3, the expenses and the take-home pay. So what we want to do here is look at what Jasper has decided to do with his expenses list. So you can see that this is actually a pretty good sized list here. So again, this is his list. Your list could be different, but this is a great thing to work from. And we're going to notice a few other pieces in here that we haven't seen yet because this really has not been built out to this point. So we can see some things that he's added. We certainly talked about student loan and mortgage and rent. He's a single father, so he has a child for care. We talked about groceries, cable bill, cell phone, auto insurance, pretty common things. He has a spot here for dining out, so he says, maybe I spend $50 at dinner, I get a couple trips out of this a month. So this is a new ad. Certainly gasoline, so he drives a car. Now notice here we have furniture, credit card, and computer. So we have financed in parentheses here because that means not only his payment is as such $65 a month, which is a fixed amount, or technically should go lower if he's making his payments on time, but so the only thing this is going to do is go lower as long as he doesn't add any more money to his balance, as with credit card. Now the computer, he must be in an interest-free plan, probably for a period of time, like a grace period, to pay his computer down before any interest would accrue. Some other things here, we have bowling, so he decided to bowl in a league like I do, or did. Utilities. He still has a home phone. Like in my case, I don't have a home phone anymore, so certainly changing as the years go on. He has a health club, doctor's appointments, memberships, haircut, and oil change. So that's a good one as well. That could also be just considered more probably in the supplemental category because he's probably saving up because you don't get an oil change every month in most cases. So again, budgets are flexible, so this could certainly be moved over here. And so you can see that this, again, supplemental is called out separately. And so he has trash, vitamins, and life insurance. Probably, to be truthful, we should be interchanging these things. Life insurance should really go up here because I have not known it to be as a supplemental item, but it can be. It could be quarterly, so I don't want to fully say for sure. But again, just depending on your situation. So I guess I should take that back and say that in his particular case, he must be assuming that he's getting charged quarterly or maybe biannually. Okay, so we can see how this list is built out. And so what we want to do next now is say, well, we have all of these listed. Now we need to know what our income is to make sure that all of these items can be paid for. So we're getting to the take-home pay here, and we have a little green little box of a tidbit here. Again, for those of you that may not have a 401k or not sure what those are exactly, at this point what we do want to say is that we want to talk about not only 401k but other pre-tax income type of things. So what we're saying when we talk about net income is that medical, dental, union dues, flexible savings accounts, and the 401k rather, they're called pre-tax. That means if someone makes $1,000 and all of those items that are pre-tax for him, let's say are $200, you subtract that number, and then the tax starts on the $800. The tax does not begin on the $1,000 amount. Anything in your paycheck that can be pre-tax is a benefit because it's just less tax that you're going to incur. Okay, so we're getting into a little more information here, and we see that Jasper has been given a salary of $60,000. What we want to say here, by the way, which you don't see, is that we're going to do some pretty loose interpretation here. We want to make this easy to start out with, okay? So one thing we want to say here is that Jasper's salary is really $80,000. That's gross pay, right? And then what we're saying up in here, or we will say that you don't see it, we'll see it a little bit later, is that we're just going to take out a straight 25% in tax. And if we add that up and multiply that out, that's going to equal 20 grand. So 80 from 20 equals 60. So this is the number we're going to work with for Jasper's salary for this book, for this exercise, and beyond. Not everyone gets paid in the same cycle. Some folks get paid bi-weekly, some people get paid monthly, some people get paid weekly. So, for example, here we want to look at a couple interesting pieces of information. So we'll go right here and we'll say, if you're a weekly person, or you're going to have 4 months of the year where a fifth check is given to you. So that means 8 of the 12 months, there'll be 4 checks, right? And then 4 months, you'll have 5 checks. And that's just the math. That's just the way the calendar works. Now, we have being paid, let's see, bi-weekly right here. Bi-weekly is every other week, correct? So in that case, you're going to have 10 out of 12 months. I have to write the 12 here. 10 of 12 months equals 2 checks. And then 2 months, you're going to get 3 checks. And that's what we call bonus money. And we're gonna see how this goes here a little further down the road. But this bonus money, this is where you can build in, because you're used to living off 4 checks most of the time, right? 3/4 of the time. Here even more so, 10 of 12 months. So if you can live off that most of the time, then you can do that all the time. And then these additional checks over here can be used for some really great benefit. It's kind of like a built-in stipend or a bonus, or kind of like a tax return in some regard, right? So let's move this up real quick so we can play with a little more real estate. Here's an example of a 2013 schedule, and here are the actual months based on that particular year that checks would be received based on these hypothetical examples. So what we want to do is think about not only the folks who get paid like that, but there are folks who get paid in different stretches, and we're going to find out how to manage those as well. The first one we want to talk about is an erratic pay schedule. And a great person who would understand this is a bartender or a server or somebody who works in a restaurant, right? Because they know that they might be used to working the same amount of hours within reason, but it's still not like a salary person who works 40 hours, or some hourly people work 40 hours and they just, they get paid as such. So that can vary. And on top of that, those folks work off tips. And those tips can vary as well. So they need to do a little more digging deeper to find out how much money they're actually living off of. They have to go back and check their past months and come up with that established number. So they have more of a challenge to deal with. And we'll get into that a little later and how to help those folks out. So you can see down here we talked about 8 of the 12 months for a person who is paid weekly, and you can see the other 4 months where they'd get their money, that 5th check. And then the bi-weekly person, 10 of the 12 months and 2 of the 12 months. Now if you add up all these numbers, they balance out. So it's more of when the money comes, but again, you're used to this money here and this money here. You circle this as well. And that's the concept we want to be able to stick with. Want to get that drilled into your head if you can possibly do it. And so what we want to say here is you want to live off the lowest monthly amount rate. So that's what this means. So what we want to do at this point is that we're going to say that Jasper is getting paid bi-weekly. And then the math shakes out with the $60,000. So the numbers you actually see right here, which I kind of went up a little bit too fast, is that right here, Jasper is going to receive 26 checks during the year, which averages at 2308. But what we're saying again as a recap is Jasper is going to live off 2308 times 2 all year long. And then we will deal with this money down the road. So with that information, now we're saying we know what his household income is at this point, and that's $4,616 per month. His expenses from the grid that we looked up above came out to $2,735. So he is left with $1,881. And so that's very good that he actually has that money, which means he has a surplus over his expenses. And so obviously that is a great thing. Let's scroll down here a little bit. We have another little tidbit for you. If you did not know, in terms of like percentage of tax, but government can do whatever they want, and that means there is a 1.45 tax for Medicare and 6.2 for Social Security. So that means 7.65% of your check will automatically be distributed to those vehicles, and that's not talking about anything as a state tax or a federal tax. So again, this is just a little piece of information. So when you're thinking about figuring out your taxes down the road, this is the way it all comes out. This is a key piece. So this is going to conclude our section here right now, and you can see we're going to be getting into building some savings vehicles in the next video. So I look forward to seeing you there.